Hello traders, today is the 8th of October 2013 and the time in London is 1:43 a.m. in the morning in London. In New York, 8:43 p.m. Because of the time difference between London and New York is 8:43, which is 20:43 p.m. on Monday. Because of the time difference in London, it's already Tuesday, 1:43 a.m. All right, and it's 8th of October. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend, wie geht's? For those of you who are new to us, we are the TSTW SYS008 traders, and our website is www.24ElliottWave for Elliott Wave trading. Our home website is www.stochastic-market.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. The title of this video is Corrective Waves Mind Game. Corrective Waves Mind Games. Ladies and gentlemen, I've said to traders before that to master Elliott Wave, one must be able to master the corrective waves. Now, the purpose of this video is not about the corrective waves itself, it's about the mind game of corrective waves. All right? I need to highlight to traders that it's very important that you learn to master each corrective wave pattern, okay? Each corrective wave pattern, otherwise you may not enjoy the wave trading, all right? Talking about the mind game, the corrective wave mind game, one number that comes into our mind is number 3. When we see the price move 1, 2, 3 and stops, and the move did not continue beyond the end of the third move, the first thing that is coming to our mind, talking about the mind game, is a corrective wave. So, generally speaking, corrective wave is formed of 3 waves. So, for us, Elliott wave practitioner, 3 equals correction. On the other hand, when we count 1, 2, 3, 4, 5, the first thing that comes to our mind is, okay, motive wave, impulsive wave, all right? But there are other complex waves, all right, that can confuse traders because we see sometimes, all right, A, B, C, D, E, A, B, C, D, E, which is, okay, 5 wave, all right, each wave being divided into 1, 2, 3. So we have 15 waves together. The A corrective wave divided in 1, 2, 3. So A, B, C, D, E. If you don't know what I'm talking about, check our website, all right? So traders sometimes get confused. We also have the zigzag pattern, which is a corrective wave. This is a zigzag, you see? This is zigzag. Price went down, price went up a bit, price went down. This is a zigzag pattern. But this section of the zigzag pattern, you see that the price, this move will be divided into 5 waves. 5, 3, 5. 13 wave. This is a zigzag pattern right here. Now, talking about the corrective wave mind game, sometimes you may see, so for instance, you see a price move from A to B, right here, all right? Move from here to here, very bullish, all right? Impulsive move. Probably there was a consolidation before, and then we see the price run very, very fast like this, all right? So you are probably on your 4-hour chart, on your hourly chart, or your daily chart, or your weekly chart, whichever time your daily chart, especially your daily chart, you see like this, run fast, fast, fast. All right? And then it start coming down. So you count 1, 2, 3. You say, ah, George said that it's 3. Then it went again 4. You say you think that it's going to go up. Now you are taking out. Price went out, and it formed 1, 2, 3, 4, 5. And you are wondering, well, what kind of correction is this one? All right? Because in our mind, when we see 1, 2, 3, Elliott wave traders are thinking of correction. They will say that, okay, that's the end of the correction because there was an impulsive move, and then we see 1, 2, 3 move down. So we will be thinking, well, this is the end of our correction. Then surprise, surprise, price went again for a fifth. When we see a correction formed of 5 waves, the first pattern that is coming to our mind is what? The zigzag pattern, because it's 13 waves. 1, 2, 3, 4, 5 in this session. 1, 2, 3, and 1, 2, 3, 4, 5. So when it goes like the 1, 2, 3, 4, 5, we will be watching the move, the next move. So if he bring it like this 1, okay, and then he did like this 2, and then we say, well, where something's happened, and then it goes like this 3. And now the common sense trend line is broken, and start rolling it down. We'll expect again another 5 subwave down. We'll be thinking of a zigzag pattern. It's a very powerful, okay, pattern that traders must understand, especially traders that are using a Fibonacci retracement. Very often, traders will see the price will go from A to B. They will draw their Fibonacci line, okay? So they are looking at 50%, they are looking at 61.8, and probably the price, if you see now you roll it down, 1, 2, 3, 4, 5, okay, stop at 38.2%. The first thing that is coming to, okay, mature Elliott wave traders that, well, we are likely to see a zigzag. So they will not be very, very enthusiastic to buy like crazy Fibonacci traders, because they know that this correction has been divided into 5 waves before touching the Fibonacci zone. So price start going up, they will be careful, and they will be thinking, watching this support level here, and they will, if that support level is taken out, they will be expecting the price to display 5 subway to the downside. The pattern of a zigzag pattern is a powerful pattern that will help Fibonacci traders to make excellent decisions. Sometimes the best Fibonacci pattern is this one. Price goes up from A to B. Here it is. Talking about Elliott wave, corrective wave mind game. And then it went from A to B bullishly. We are Elliott wave trader, and then it goes 1, 2, 3, and then it gives us a beautiful signal here. Probably there's another major support in this zone. Maybe the price at equilibrium price level, maybe the price at a small median line level, or the price at a critical price level. And we see a bullish move, and then a 1, 2, 3 sitting nicely at a very important price level. We'll be watching it and getting a bit excited that there is a high chance that the price may continue to move to the upside. As always, when you see a pattern on one time frame, you must always, okay, validate the setup. Remember, the setup, validation setup, you will go to a higher time frame to confirm what is taking place. Do not just take the signal because you see 1, 2, 3 like this. Do your verification on a higher time frame to validate the pattern before you take the trade. Wait for a valid signal before you take the trade. Use a multiple time frame trading to take the trade. The key point trader must remember in this video about the corrective wave mind game. 3 in our mind mean the end of a correction. So impulsive move, 3 wave down, we are thinking of the end of the correction. All right? And the correction in normal condition shouldn't cancel the prior move. So that's why it's so important. So if it goes like this 1, 2, 3 and start an invitation to buy here, and then it just changed direction. You remember what we said before at the beginning of this video, in the video that I called the third wave mind game. We know that if you see a prior move, a pullback, invitation to buy, and the price failed to achieve the same length like the prior move, we will look for opportunity to sell. This is the same thing that is happening here. 1, 2, 3, 4, 5 down, and then 1, 2, 3 invitation to buy here, but the price couldn't achieve the length of the prior move. All right, we will look for opportunity to sell. So we just, with that principle, that market stable data, we are likely to make excellent decision, and the price is rolling it down. When we count 5 waves, the first thing that is coming to our mind is a motive wave or impulsive wave. Here it is, 1, 2, 3, 4, 5. All right? This is an impulsive move, but the impulsive move is formed of 5 waves. The first, the third, and the fifth can be divided into 5 waves because they are also impulsive wave. This is the fractal pattern of the wave principle. 1, 2, 3, 4, 5, because they are impulsive wave. The first, the third, and the fifth are impulsive wave. But one impulsive wave on a higher degree can be divided into 5 subwaves on a minor degree. The first subwave, the third subwave, and the fifth subwave of the minor degree can be divided into 5 subwaves. The corrective wave mind game is about 3, bringing to our mind correction, but we have to understand that there is also a zigzag correction, which is a 5 wave to the downside. So when we see a correction formed of 5 wave, we will think of a zigzag correction. But there are, as I explained to traders at the beginning of this video, it is very important to master all a corrective wave pattern. There is something that we call also the parallel triangle, all right? There is a zigzag pattern. There are different types of zigzag pattern, and traders must learn each pattern carefully. I hope you have learned something from corrective wave mind game, and will put it to use, okay, to make excellent decisions. Before I close this video, one of the reasons why the corrective wave, the number for the number that represents a corrective wave is free, is because we see an impulsive move. You see, price pull back. The bull want to buy here, okay? So they want to buy here. So the price went up a bit, but for one reason, price couldn't continue the move to the upside. People sell it. As people sell it now, all right, the price has achieved probably the same length like here. So we say that, okay, that's it. They are likely to take profit according to the pattern that we call ABCD chart pattern. All right? So price is a terminal zone. We are watching a terminal zone. So they sell it first, okay, profit taking. People decided to buy again. As the price going up, some seller came in and they sell again, all right? Now, if the price found a support here, that's the end of correction because there's no more demand to sell. If there is more demand to sell, the price will continue to move to the downside because the price couldn't cancel the prior move. Is still bullish. In fact, if the price moves, pay attention, if the price moves from A to B, move up from A to B, or went down from A to B, and fail to go below or dip a little bit below the 50%, is still bullish. So we are watching the 50% of the prior move. That's the key. The median line of the prior move is a psychological price level. As long as the correction couldn't go below the 50%, it's still in a bullish zone. We will give priority to bullish signal above the 50% zone. So you very often, you will see sometimes the best signal that takes place, some traders that are gun traders, all right, that are trading around the 50% zone, they use, okay, the zigzag pattern. 1, 2, 3, 3 move, the mind game of a 3 move to the downside to the 50% level. And if they receive a buy signal here, a valid buy signal, they will buy. So they must also learn a little bit about, okay, the Fibonacci pattern. I will not talk about that in this video. I hope you have learned something from this video also about the corrective wave mind game, and we'll put into use to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the GSTW SYS 008 traders. Speak to you soon. Thank you.